Hello, I'm David Massey and I work in the Provider Risk and Assurance team within the Education Funding Agency. My team develops the financial framework for the Academies sector. This session will provide you with information about the Academies Financial Handbook. It coincides with the release of an updated edition which comes into effect on 1st September 2016. We'll begin with a summary of the accountability framework that applies to academies, as this underpins what's in the handbook. We'll then describe the main changes this year, and finally we'll give an overview of the wider content for those new to the handbook. Company law establishes the basic statutory duties that Academy Trust boards must apply in the running of their trust. This includes exercising reasonable care, skill and diligence, avoiding conflicts of interest, and being open and transparent in their financial affairs. As charities, Academy Trusts have to follow general principles of charity law by operating in the public interest and not for the benefit of owners. Trusts are also in the public sector, and so they are accountable to Parliament, which means that the expectations of the Public Accounts Committee, HM Treasury and the National Audit Office shape the rules. The requirements placed upon you are therefore largely a consequence of your trust status and in the standards expected generally in public sector life. You are required under your funding agreement to follow the Academy's Financial Handbook. The handbook brings together key principles of good financial management and should be a primary point of reference for Academy members, trustees, accounting officers, chief financial officers and auditors. We continue to develop the handbook in partnership with the sector, consulting with groups of financial officers, principals and national sector bodies. The changes in the 2016 handbook focus on both the effectiveness and the transparency of leadership and governance in academies. Reflecting the expectation that trusts should build and maintain an effective board, the handbook explains that trustees should be able to identify the skills and experience that they need, and where gaps exist, address them not only through recruitment, but also by ensuring they receive appropriate induction, training, and ongoing opportunities to develop their skills. This also applies to local governing body members in multi-academy trusts. We're also using this year's handbook to emphasise that trusts must be clear about their chain of leadership and accountability. And so all trusts, including MATs, must appoint a senior executive leader, and this person should also be the accounting officer. We're also explaining that the role of senior leader and accounting officer must not rotate. Where the accounting officer has registered relevant business or pecuniary interests with their trust, we're confirming that these must be published even where the accounting officer is not a trustee. As set out in the March 2016 Education White Paper, the crucial role of governance makes it important to know the people involved in our schools. The department is therefore extending its Edu-based system to establish a database of everyone involved in school governance in both maintained schools and academies. For academies, this replaces the current arrangements for notifying EFA of changes in members, trustees and leaders through information exchange. Recognising the financial challenge faced by the sector, the new handbook strengthens messages in several areas of internal control. These are intended to further improve financial and risk management without placing additional burdens on academies. We're emphasising that trust boards should ensure sufficient rigour and scrutiny when managing their budgets to be able to address variances between forecast and actual income and expenditure. We're also reinforcing messages about trusts' approach to investment risk to ensure that investments are tightly controlled. In terms of broader risk management, we're explaining that trusts should consider opting into the department's risk protection arrangement unless commercial insurance provides better value. And we explain that trusts must implement reasonable risk management recommendations made to them by risk auditors. There's more information about risk audits at the link on the slide. Reflecting the growth of multi-academy trusts, the new handbook reminds trustees that their oversight must extend to the financial controls and risks at constituent academies, in particular to ensure returns prepared by constituents that affect funding are accurate and compliant. To recognise that any organisation can receive concerns about its business and must be able to address them properly, the handbook now requires you to have a whistleblowing procedure in place. Finally, in relation to staff severance payments, we want to remind you that you must obtain approval from EFA where it's required before making a commitment to a member of staff. We emphasise this in the new handbook. If you're new to the handbook, the remainder of our session places the changes in context by providing an overview of the four main parts of the handbook. Part 1 describes the roles and responsibilities of trustees, accounting officers and EFA. Trustees are accountable for the success of their trust and must understand their responsibilities under the law and their funding agreement. The handbook describes trustees' statutory duties as company directors, including a duty of care and avoidance of personal gain. Trustees must appoint, in writing, an accounting officer with specific responsibilities for regularity, propriety and value for money. As trustees, you must publish accounts, and you should use this opportunity to review and report on the effectiveness of your governance arrangements. And where governance or financial management is not adequate, we could intervene. This could lead to a financial notice to improve and the loss of delegated authorities. Part 2 describes the core requirements for sound financial management. This is about trustees and managers exercising strong oversight, meeting regularly, establishing a finance committee to review financial plans, and robustly monitor activities to ensure financial health. Your accounting officer must ensure that money, property and other assets are under control. Your chief financial officer will manage the day-to-day budget and, as a member of the leadership team, will advise the accounting officer and trustees on financial matters. You must establish operational controls that cover such matters as making spending decisions, having a scheme of delegation, achieving separation of duties, and reporting financial performance. You also need a process to make sure your controls are working effectively. You can choose how to deliver these checks to suit your circumstances. For example, you can appoint an auditor, you can agree that a trustee does the work on an unpaid basis, or you can arrange peer review with another trust. You must oversee this activity through one of your committees. The largest trusts must establish a separate audit committee to do this. Part 3 of the handbook describes your freedoms over a range of financial transactions. It also confirms when you need to obtain our approval for a transaction, including write-offs, severance payments, and acquiring and disposing of land and buildings. You need to ensure that your scheme of delegation is aligned with the levels in the handbook. Part 3 also highlights the responsibilities that go with these freedoms. For example, the responsibility to ensure that money is spent for the purposes intended, that proper standards of conduct are maintained when handling money, and that good value is achieved. We heard earlier that company status requires you to avoid conflicts of interest. The manner in which you manage relationships with connected parties is crucial. You must be even-handed when buying goods and services from connected parties, so they reflect appropriate testing of the market and are undertaken at cost where necessary. Your register of interests will be comprehensive and regularly reviewed, and some interests will need to be published. Part 4 of the handbook recognises that you should expect public scrutiny underpinned by independent audit and publication of accounts. It also sets out your obligation to us to provide access for audit purposes and to supply information on a reasonable basis. You must remain aware of the risk of fraud and irregularity and have controls to mitigate the risk. Although you're responsible for preventing fraud, you must report instances to us, and we may investigate where we have concerns. This is the end of our session on the handbook for 2016. In summary, you should ensure you understand your powers, apply sensible controls, and adopt the handbook both in letter and in spirit. Thank you for your time.